Our next guest says that 25 or 50 actually isn't the most important part of the decision. He's focused on the dots for the end of the year and the end of 25. Jefferies chief market strategist and his CNBC contributor David Zervos joins us this morning. David, good to see you.
Good to be here, Carl.
Wonder what you make of our discussion so far and whether Dudley or anyone else has made a case that has moved the needle in your own mind.
Not in my mind. I don't think things have moved that much. I think the 25 story is the most compelling story for what they're likely to do. But I'll stick with what I wrote to you guys earlier and what you insinuated in the opening remarks, which is I think the most important thing is to revise these dots at the end of 24 and the end of 25. If you look at the end of 2025, for example, the Fed has a 4.1% Fed funds rate at the end of 2025. That's really that's 125 basis points over the next year and a quarter. That's if we're going to start talking about 50s now, you're getting half of that done in a meeting. Something doesn't add up. So, and that was just the projection in June. So I think going 50 is a little bit scary for the market. I understand the idea of wanting to go faster, and I'm actually reasonably comfortable with the idea that we get to neutral, something around 3.25 pretty quickly. I'd like to see us there maybe mid-year. I think that would be a sensible story, and I think that's probably what the Fed's thinking. I think that's a good idea. But to go 50 here right before an election, when, in particular, Bill Dudley has been one that's had some election sort of interference of sorts in the past with his article in Bloomberg in 2019 talking about enabling the Trump administration and not enabling it and voting for or pushing for rate hikes going into the 2020 election. So I'm very wary of the politics. And I think 50 looks political, smells political, and feels political. And I just think that Jay's been so good about avoiding politics. He's been good at it. He was good at it in 18 when he got pushed around by Trump. He's been good at it when Maxine Waters and Sherrod Brown and Elizabeth Warren write him letters a year ago, almost every meeting saying he should be cutting. Why compromise, I think, his excellent agnostic stance politically by going 50 right here before an election? It just looks a little...
You think 50 gives the appearance that he is fighting for his job?
No, I think it's something that gooses everything a little bit more right before we're all about to go vote in 50 days. And I'm just not sure he wants the appearance of that, especially when he's got a meeting 2 days after the election. He's going to get to learn whether we have a Harris administration or a Trump administration. Well, I hope he does 2 days after. We might be waiting a little longer. But I think the easy story, especially with the data Sarah was showing, is just do 25 and maybe give us a kind of dovish look at what you're talking about for the end of the year. Remember also the dot for the end of 2024 only had one rate cut of 25 basis points priced in. So you would be, you're really making a pretty big revision if you go 50 and then you have two more meetings where people are going to start talking about another 50 or at least another couple 25s. So it's a big switch in 3 months. As I think David was saying in the beginning of the segment, really, has that much changed in the last 3 months that, we're starting to talk about 50s? It seems a little aggressive, and I would argue a little suspect.